What is up, investors, and welcome back to the Everything Crypto Show, where we bring you the latest and most important news moving the crypto markets every single day. Now, we are back today with a crucial market update as the FOMC meeting minutes did conclude yesterday and sent the crypto markets pumping, and we're going to talk about exactly why the markets are receiving this as good news. Then we do need to talk about Sam Bankman-Fried, who was finally in his very first interview after the collapse of FTX. We're going to break down everything he said and whether or not I believe a word of what came out of his mouth, if there is any chance of FTX turning things around or being bought out. Definitely some interesting things to talk about there. And then last but not least, we got to talk to you guys once again about why Binance CEO clearly cannot be trusted with what he says on Twitter. At the same time, the Crypto.com has sealed a major crypto security partnership. So without further ado, it is time to sit back, relax, grab that morning cup of joe, and enjoy the show. Happy Thursday, everyone. If you've not yet hit that sub, like, and notification bell, please consider doing so and joining the Everything Crypto Squad. And I love and appreciate you all. Now, with that out of the way, we're going to hop right in here with the question of the day. And today's question is, did you hear what Sam Bankman-Fried had to say in his first official interview since the collapse of FTX? Let me know in the YouTube comments down below. And if you had, let me know in the YouTube comments down below whether or not you believe anything that came out of his mouth. And we are going to once again review it later on in this video because there are definitely some interesting things that he said that we do want to talk about. So before we actually get into the charts, I do want to give you guys a little bit of context behind the pump that did happen yesterday. And the main reason here is because Fed Chairman Jerome Powell said that small interest rate hikes could start in December. He confirmed that smaller interest rate hikes are likely ahead even as he sees progress in the fight against inflation as largely inadequate. Powell said that he sees the central bank in position to reduce the size of the rate hikes as soon as next month. Now, obviously, this did send the markets ripping to the upside as soon as they heard any sort of indicator that the Fed was considering slowing down the rate hikes. But at the same time, what he did say following this comment did not seem very bullish to me. So I'm a little bit confused as to why the market took it as good news. But we're going to break this down because I definitely still think that we are going to get some juicy buying opportunities in the future. So he says here that despite some promising developments, they have a long way to go in restoring price stability. But it does make sense to moderate the pace of their rate of increases as they approach the level of restraint that will be sufficient to bring inflation down, effectively saying that they may be reaching a rate where it finally is time to slow down the increases, and that further drastic increases are not going to even do too much to fight inflation. But it is not a sign that inflation is coming down or turning around, okay? So he says here that given our progress in tightening policy, the timing of the moderation is far less significant than the questions of how much further we will need to raise rates to control inflation and the length of time it will be necessary to hold the policy at a restrictive level. So at this point, I think we're so high in the rate increases that I'm not even too concerned about whether it's a 75 basis point hike or a 0.5 basis point hike, a 50 basis point hike. I'm more concerned with how long are we going to stay at these higher levels because we're still incredibly high on these interest rates right now. So I kind of think the markets are looking at the wrong thing at the moment. And he even says here that it's likely that restoring price stability will require holding policy at a restrictive level for some time. History cautions strongly against prematurely loosening policy, and they will stay the course until the job is done. So I mean, once again, like a slightly more dovish Fed compared to previous meetings, but still indicating that we do have a long way to go. I think all the market heard was that interest rate hikes were going to slow down and everybody started buying. But if you actually pay attention to what he said here, I think he indicates that we're still in for a rough 2023 in terms of the economy. And I do still think there are going to be some better buying opportunities ahead. So definitely something to keep in mind. And I do also want to keep you guys sort of like just focused on the charts here for a second now, because you're going to notice that even despite that pump that we did see, Bitcoin is still not make any sort of key technical breakout. So ever since we broke down below 17.5K, we've been trading in this $2,500 range, give or take between 15 and 17.5. Now, I did say that I think it is more likely that in the coming weeks, we do actually test 15K and potentially break below 15K. And that even if we do see Bitcoin move to the upside of this range, I would not be excited until we see any significant move on Bitcoin, even above about the 18.5K level. Now, you're going to notice that even on the pump we had yesterday, we couldn't even come back up to retest that June low at 17.5K, okay? And that is a key level because obviously, since it did act as the quote-unquote June bottom, and it did act as support through June, July, August, September, and October. You know that it is going to act as some very strong resistance back to the upside. So even if you do see Bitcoin pumping, Bitcoin in the green, I would not be taking any move seriously on Bitcoin until it can actually get above 17.5K, and then we're just right back above the June low, okay? And then we have the 50-day moving average at 18.4, the 100-day moving average at 19.1, and then obviously we have that previous all-time high at 20,000. So definitely still lots of work to do when it does come to Bitcoin actually truly flipping bullish, and I just don't think that we're there yet. Then additionally, one of the key moving averages, I think the biggest one that we are looking at here is the 200-week moving average sitting at 24K. And the reason being is because if I actually remove the lines from the chart, you're going to notice that Bitcoin has pretty much not spent a sustained period of time below this 200-week at any point in the last like 5 or 6 years. In fact, if you had bought Bitcoin anytime it did hit the 200-week, it would have made for a great buying opportunity here in 2019 from 3,500 all the way up to about 13 grand. And then in 2020 here, all the way from about 5,500 to this previous bull market high of 69K. Now, if you had bought once again at the 200-week moving average here, thinking this time would be the same, well, you would have gotten absolutely wrecked. And essentially, suffice to say that Bitcoin is in uncharted territory at the moment. And even despite the pump that we saw yesterday, I don't think that we are exactly in the clear yet. Now, Ethereum here is actually looking much better than Bitcoin, and the only real reason being is that Ethereum has not yet retested that June low. Interestingly enough, ETH is actually still well above that June low, which is definitely shocking considering what has been happening in the broader markets. The fact that ETH is still about 40% above that June level at 885. So we do have Ethereum currently sitting at 1279. The only thing I will say is that it does have in common with Bitcoin here is that it is still below its 2018 all-time high of 1400 and also below its 200-week moving average at 1338. So although it does look better than Bitcoin, I mean, Bitcoin's not looking too hot. So that really doesn't say much about Ethereum either. And don't be mistaken, Bitcoin does still dictate where the broader crypto market moves. So if it is going to break below 15K, which I do think it will in the coming weeks, then definitely keep in mind that Ethereum can break below 1,000. And we have discussed previously that Ethereum does tend to capitulate harder than Bitcoin near the tail end of these bear markets. So I would also expect that if we do see that one more leg to the downside, that Ethereum will be taking it a lot harsher than Bitcoin will personally. And that is what I'm waiting for. So I am still waiting for that 650 buying opportunity on Ethereum, and we're going to continue to dollar cost average regardless, but this is the price I'm looking for some juicier buys personally. Now we're going to hop into the Bitcoin news here, starting off with this tweet from Mario Nafal, and basically what he shows you here is that this month was the 4th largest crypto capitulation ever, with a 7-day realized loss of $10.16 billion, okay? Now keep in mind that the total crypto market cap at the moment is sitting at $814 billion. So yes, for people to realize $10 billion of losses in 1 week, that is definitely a true sign of capitulation for the broader crypto markets. Now that is 4x the 2018 peak drop and 2.2 times the 2020 collapse. So you're going to notice that in 2018 we saw capitulation of about 2.5 billion. In March of 2020 we saw 4.6 bill in capitulation, and then we actually did see some bigger capitulation here in 2021 and 2022 so far, but this was still the 4th largest crypto capitulation phase in history, and that definitely does indicate that we are in and around approaching some sort of bottoming process. But do keep in mind that at the same time, we saw almost double the capitulation in June of about 19.82 billion, and we are now below those June lows on Bitcoin. So this is not exactly an indicator that we are due for a reversal, but we can only capitulate so much. We can only have so much money wiped out of the crypto system before new money does enter, and that is when we do enter that accumulation phase. Now, additionally, the biggest flight risk to Bitcoin that we have been talking about here is the Bitcoin miners, and they have been selling aggressively. So you can see here, this is the miner net position change, and obviously when it's in the green here, it indicates that miners are buying. buying, and when we're in the red, it indicates that miners are selling. Now, you're going to notice that this is the most aggressive rate that miners have been selling at since at least May of 2021. And if we actually zoom out here and take a look at the all-time chart in terms of Bitcoin miner pressure, then you can see this is actually the third highest phase of Bitcoin miner capitulation in all time for Bitcoin. So back in 2011, we actually saw the Bitcoin miner sell pressure indicator hit a 12.0 almost, and that is when Bitcoin had a price of $2.10. Then back in 2015, Bitcoin mining pressure actually went up to a 5.0 on the scale, and this is when it had a price of $290, all the way down from that peak of about $800 at the time. And now today we have Bitcoin at $16,000, and the Bitcoin miner sell pressure has in fact almost hit that 4.05 again, actually right now sitting at about 3.93. So suffice to say that yes, we are seeing the third highest level of Bitcoin miner capitulation, but we also have seen that every single time Bitcoin has been in a period of time like this where the miners have been selling, the price has been significantly higher, and this indicates that it has made a ton of progress in between these different Bitcoin mining phases. A lot of this crypto market does run on phases, these halving cycles, these miner capitulation phases, these 4-year cycles. There's definitely a lot to keep in mind, and all you need to know is that yes, Bitcoin miners are capitulating, but we have seen this before and we will see it again, and this is not in fact the worst the selling pressure has even been, so it's nothing that Bitcoin has not faced before. Now you can also see here, if we take a look at the 6-month chart for the hash rate, that we have finally seen a steady decline here. Once again, another indicator that yes, we are in fact capitulating here on the Bitcoin miners. Not a steady decline, sorry, pretty sharp decline actually, but a little bit out of the normal considering this past year really has just been a complete rip for the hash rate. In fact, there's been a massive inverse correlation between the actual price of Bitcoin and the hash rate. This is the first time we've pretty much seen in the bear market a very, very steady decline. We did see one back here in June, obviously, but this was once again during another brief period of minor capitulation. Definitely not as serious as the phase that we do have going on right now, but this definitely does indicate once again that we are going to see some sort of reduced selling pressure on the Bitcoin miners in the near future once they finish offloading their balance sheet. And that is the good news, is that we'd rather them capitulate now, because in my opinion it was inevitable. So the sooner they get this over with, the later. We also have the network difficulty here still pretty much almost at that all-time high, once again indicating that we do need to see some more miners actually further capitulate, potentially try and bring down that network difficulty, have less miners competing for the network, and the most efficient ones will take their place. And that is survival of the fittest. That is how this Bitcoin mining industry works. And I think that the biggest thing here that is really preventing these miners from operating as normally is the miner revenue. I mean, you can see here clearly that given the declining price of Bitcoin versus the US dollar, given the rising cost of energy, Bitcoin miner revenue is back at 2020 levels, and a ton of them took on a bunch of debt in 2021 in this race to just mine as much Bitcoin as possible while interest rates were low. Well, now interest rates are high, lending rates are high, and nobody really wants to be lending money to Bitcoin miners, knowing that the industry is in a period of really duress and a lot of them are blowing up. So definitely tough for Bitcoin miners to find that funding at the moment. That's why they've been selling Bitcoin. That's why they've been, even some of them have been selling their equipment, and some of them have been paid to not operate and save energy that way. So definitely a very interesting scenario for them, and they do need to sort themselves out obviously before we can actually see any sort of reversal for Bitcoin, because they do have quite a big impact on the actual price of Bitcoin. Now, we're going to talk about Ethereum here as well, which unfortunately has once again flipped inflationary. Okay, so following this whole capitulation phase we saw, and really just the whole bank run we saw from FTX, from crypto.com, you can see here that Ethereum went from having a positive issuance of 2,800 down to a negative issuance of about 6,100, and since then we have peeled our way back to the upside here from 6,155 all the way back to a net positive of 204 Ethereum. So in the past 76 days, 204 Ethereum has been brought back into the float. And to put things into perspective, that's really not bad at all. Had we been under proof of work, the supply change here would have been 910,997 Ethereum. So yes, the transition to proof of stake definitely did a lot to reduce the issuance of ETH. And although we have flipped positive again, I think that is something that we should expect in a bear market. There is not as much on-chain activity. I think once we're in a bull market with that sustained on-chain activity, activity, once the Gwei meter stays above that magic number of 15.4 on a consistent basis, that yes, Ethereum will be consistently deflationary. And I think that is when people are really going to be shocked by the price action of ETH in the next bull run. And it does sort of make this infinite loop where you have sustained on-chain activity. You have EIP 1559 burning more Ethereum than is being brought back into the float. You have the price increasing. Then you have people buying, which leads to sustained on-chain network activity. And then the cycle just goes on. And that is definitely what I think Ethereum will be looking like in the next bull market. And even though we know that Ethereum is going to be an amazing performer in the next bull run, given these new tokenomics, it's obviously not something that a lot of people are paying too much attention to right now, given what is happening in the broader markets. But you know who is paying attention? The Ethereum whales, and that is definitely something to be keeping in mind. We want to take a look at what these whales are doing, and as you can see here, addresses holding 100 to 100,000 Ethereum have obtained back 1.9% of the available supply in just 3 weeks. Now, this is the highest rate in 2 years, because the last time we saw this, they accumulated back about 2.1% of the available supply over 5 weeks, and when this happened, the price jumped 50+%. Now, I'm not saying this will happen again. What I am telling you is that yes, people are still buying Ethereum despite what is happening in the broader crypto markets, despite all the FUD. The whales behind the scenes are paying attention to this new proof of stake ETH, and I definitely think that they are taking any opportunity they can to load the boat. So you guys know that we do always talk about dollar cost averaging. I still personally think that Ethereum is going to go lower, but the fact that these whales are actually loading up right now, even at these prices, buying back 1.9% of the available supply in just under a month, that definitely does fare well for Ethereum. It shows you that the long-term ETH whales remain bullish, and that is why I think that as long as they are here to continue supporting Ethereum, that yes, Ethereum is going to rip whenever we finally do reverse. Now, we got to talk about Sam Bankman-Fried's interview here, and mainly about the way that the media has sort of been covering this. So for starters, I want to play you guys this clip, because this is honestly like horrific to just even like watch. I can't believe that they actually went ahead and tweeted this. These people were applauding Sam Bankman-Fried at the beginning of his interview. So take a listen to this real quick.
On behalf of everybody here and on behalf of the public, I want to thank you for engaging in it at a time, in truth, when I know you've been advised not to. So thank you so very, very much. Thank you. Sam Bankman-Fried, everybody. On behalf of everybody here.
They're applauding him. They're applauding the man who stole billions of dollars and then hopped on a plane and ran to the Bahamas after it was revealed that he did have a backdoor to move customer funds in his very own exchange being undetected. And they're calling him brave and applauding him for being here. I mean, honestly, this media coverage is just shameful. If you still believe anything that comes out of the mainstream media, I don't know what to say anymore. And we even have here, again, an article from the New York Times, who did in fact run the DealBook Summit. And look at this headline once again. Look, I screwed up. Sam Bankman-Fried is challenged on the collapse of FTX. He said his lawyers did not want him to talk, but he answered questions at the DealBook Summit anyways. Wow, so brave. So you can see here once again that the coverage of him is really just like shameful from the mainstream media, and they're kind of just covering all the excuses that he did come up with. And we're not going to cover what New York Times said, because obviously they cannot be trusted. We're going to take a look at someone from the opposite end here. We got Mario Nafal pretty much just summarizing what Sam Bankman-Fried had said. Obviously, you know, we can just kind of take his words for what he said and kind of see if there's any truth to this whatsoever. Hint, hint, there is not. There's a whole lot of BS here. And if you believe anything that he said in the interview yesterday, if you felt bad for him even one bit, then his lies worked, okay? Because clearly this man has not given a crap about the crypto community or his customers for a very long time. And it's pretty easy to apologize after you've stolen about $10 billion, or whether just completely wiped out $10 billion worth of funds. So he says here, I made a lot of mistakes, never tried to commit fraud. U.S. platforms is fully funded. I believe withdrawals could be open today. Well, then why did you file for bankruptcy on them? FTX could have margin call positions, but it didn't do so. I'm in massive failure of oversight. I was not running Alameda. I don't know the size of their position at FTX. Once again, don't believe that. He literally lived with the CEO. Position size of Alameda at FTX became larger over the course of 2022. Yes, because you continued to make losing trades with customer funds money. FTX didn't have a bank accounts globally in 2018 and 2019 and relied on Alameda to receive client money and FTX credited clients. I really knew there was a problem on November 6th, and I started to become nervous FTX was not going to be able to fill customer withdrawals. And as we know, he actually tweeted on November 7th that customer funds were safe, that CZ was lying. So once again, proving that he was lying at the time about that tweet. And you can go ahead and actually check his Twitter to verify those tweets are there, if he didn't delete it anyways, which we did catch him doing before. He says here, I was not really cautious enough from a downside perspective. I was looking at a 30% down move. Then what happened was a 95% down move. You should have been prepared for that either way as the owner of a business with your very own token and customers' funds involved. Lawyers advised him not to speak, but he says he has a duty to talk. Wow. By November 8th, he was worried there would be substantial liquidity shortfall. There was. That was the same day that they signed that non-binding letter of intent for Binance to acquire FTX, and we all know how that happened there. He's confused as to why FTX US is not processing withdrawals right now. Once again, don't buy it. You literally declared bankruptcy on FTX US after you said that it was going to be fine. He says, I screwed up and we messed up big. Yeah, no crap. Admits FTX had huge management failures. Did they even have a management team over there? It was like 10 people running the entire company. Admits there was no person in charge of position risk of customers. He doesn't think investors or staff bear responsibility for FTX failures. Yeah, I mean, honestly, like this is the whole thing. It's just a whole bunch of crap, okay? It kind of like once again is a pity party for Sam Bankman-Fried. Every single time he starts off apologizing, he just ends off trying to justify what he did instead of truly just apologizing for what happened and trying to make things right. And to be honest, at this point, even if he did give a sincere apology, I just don't know if I would believe him. Actually, I can tell you that I would not believe him because he has been caught lying on multiple occasions. And once again, it's a lot easier to ask people for sympathy now that you've already lost $10 billion worth of customer funds and the jig is up anyways. Had they somehow been able to continue operating and, keep doing what they were doing behind the scenes, I don't think he'd be acting like this at all. I think he'd be doing exactly what he was doing before. So, I mean, to kind of answer my own question at the beginning of the video, I have heard what Sam Bankman-Fried has to say. I've read most of it. I've heard a little bit of it. I don't buy a single word of it. Let me know what you think about this in the YouTube comments down below. And I still can't believe this man seriously got an applause at a financial event after what he did in the past couple of weeks. So just something to think about there in terms of who Sam Bankman-Fried is sort of connected with and just the mainstream media coverage in general. Now we got to talk here about CZ's tweet that came out on November 13th when he was flooding Crypto.com, and this was in regard to Crypto.com actually going ahead and moving about $400 million worth of Ethereum to the wrong wallet address. It was a whitelisted wallet address in their company with Gate.io, and effectively this was right before their proof of reserves and wallet address reveals. So CZ tweeted here to FUD Crypto.com, if an exchange has to move large amounts of crypto before or after they demonstrate their wallet addresses, it is a clear sign of problems. Stay away, stay safe. So I found it pretty funny that after tweeting that and then going for their proof of reserves audit, that they were actually caught transferring 127,000 Bitcoin, about $2 billion worth, from a Binance to an unknown wallet. Now saying that this is part of the proof of reserve audit. The auditor requires us to send a specific amount to ourselves to show we control the wallet, and the rest goes to a change address. I mean, okay, I just think that it's a little bit hypocritical that he obviously is doing this after this was the entire basis of him fudding Crypto.com a couple weeks back, starting that bank run. Obviously, it was not successful, and then we saw him actually try to FUD Coinbase, say they were lying about their Bitcoin reserves potentially. There was some indiscrepancy between articles that were never officially kind of like confirmed or verified with by the Coinbase team, and in fact, Coinbase is a public company, so CZ could have double-checked this before he actually tweeted and tried to spread FUD. Once again, I think showing you that although CZ does care about crypto as a whole, he obviously does care about keeping his platform on top, even if it does mean damaging his competitors' reputations in the process. But definitely very telling here that he FUDed Crypto.com for one thing and then did the exact same thing, and just something to keep in mind to sort of just take what the guy says with a grain of salt moving forward. Now, despite all the FUD with Crypto.com, we have seen them continue to operate business as usual, making these partnerships, and the Crypto.com DeFi wallet extension now supports Ledger. So you can in fact import your Ledger hardware wallet with just a few clicks and transact on your web browser with an enhanced layer of security with that cold storage connection. And yes, this is a massive deal for the Crypto.com DeFi wallet. We know that cold storage is incredibly important right now. Obviously, as people are becoming more focused on the security of their funds, which is very good for the maturity of the crypto market. It shows that people are beginning to get a better understanding of having self-custody and true ownership of your assets. So you simply just go to import wallet and then you connect your existing Ledger account, and boom, you can actually go ahead and open up a Crypto.com DeFi wallet extension. I want to say like a profile, but you know what I mean, a wallet address, and it's just going to simply connect to your Ledger. So it's not a new address, it is an existing address on your Ledger being imported into this software, and then allowing you to interact with EVM compatible networks, crypto.org and Cosmos, as well as the Cronos chain here, which obviously is the EVM compatible side of things. So yes, this once again does show that the DeFi wallet is gearing up to be a serious competitor to MetaMask, and I think that adding this additional layer of security is going to really encourage a lot of people to sign up for this DeFi wallet. They continue to improve the UI look. It has an incredibly clean interface, and I think that it is going to benefit them in the long run, especially as MetaMask did make that move last week to start tracking users' IP addresses, a move that a lot of people were obviously not a very big fan of, and that is only good things for the Crypto.com DeFi wallet. Now, that is not the only integration we saw with Ledger, as you can now actually go ahead and support your Cronos holdings right on your Ledger Live account. So Cronos chain is now supported and available in Ledger Live. Previously, it was only the crypto.org chain. And this effectively means that if you go to add an account now, you can add a Cronos account and you can send your CRO coin from the Cronos chain over to Ledger. It will in fact show up in the app, and that means that you can keep your CRO in cold storage. You can buy it on the crypto.com main app and then move it into this cold wallet address, and that is definitely something that I always recommend doing. You guys know that I trust crypto.com as a platform. I think that they are incredibly safe, but I still don't recommend keeping your crypto on any centralized exchange, and they are no exception, and not Binance, not crypto.com, not Coinbase. So yes, it is very good to see that Cronos is knowledgeable and really aware of the fact that people do want secure ways to hold their crypto, and partnering up with the biggest cold storage wallet provider is a very good step in that direction, in my opinion. So without further ado, I hope you guys did enjoy the content in today's video. You know what to do. If you made it all the way to the end, you are an absolute champion. Let me know in the YouTube comments down below and claim that champion status. I hope you are all having an amazing Thursday, and I hope to catch you in the next one. Peace out for now.